one topic that I wanted to bring up now, because I don't think you touched on it during your prepared remarks. A couple of questions around Daily Journal. This question here says, I would love an update on Daily Journal. We saw a large increase in revenues after a long period of stasis just a couple of days ago. Matthew, when do you expect the Australia contracts to come online? What do you think of the new CEO? Thank you.
Okay, great. It's worth pointing out there is a commitment and consistency bias. So you'll see many funds that refuse to talk about their existing positions. You'll also see oftentimes if there's low volume or if we're talking to a really large audience, we'll be reluctant because it will perhaps cause the price to move slightly and maybe we're buying. And I bring this up because we've actually inverted the equation a little bit. The commitment and consistency bias basically says if you talk publicly, you're committing yourself to your thesis and you discount disconfirming evidence and you find it much more difficult to move away from the position. However, these are truly infinite compounders. We want to be holding these for a very long period of time, decades, if we can. And so we're okay with committing ourselves to this, subjecting ourselves to this commitment and consistency bias. So without going into an enormous amount of detail, I can touch on Daily Journal a little bit. First of all, Stephen Myhill-Jones and I had a call, I guess, probably 24 months now. He's a really outstanding choice. He was brought to Charlie Munger by the guys at the Tiny Funds. I think some of you know those folks. And we're really pleased because what we understand now is that had Stephen not been available, Charlie had to find an alternative. He wasn't sure who was going to run the firm, and he was even exploring options for a total sale, which would have been a problem because we would have lost the potential upside. So Stephen ran software solutions, government software solution in Canada for a lot of years. Those of you who are reading through these annual reports will see that they just opened up Daily Journal Canada. So that's a very exciting development. And we are really pleased. He is a perfect candidate. He is young. He is experienced. He has already achieved great success. And he has this opportunity to work with not only Charlie Munger, but the 300 people that have been hand-selected by Charlie Munger and Rick Guerin and all these incredible folks for decades. So Stephen's very pleased with his role. He's happy to be there for a very long period of time. We want him to stay for a long period of time. I think he's a great addition to the firm. I'm very pleased with the work that he's doing. So regarding some of the other, so Daily Journal is remarkable. Daily Journal is an incredible business. It's a SaaS business. So people thought it was a newspaper business for years. I think we probably internally, we know this business better than I think anybody on the planet outside of the company, probably better than most people inside the company. And we brought a lot of the information out. So nobody really knew what Daily Journal was doing, but Charlie Munger was referring to this software solution. What they're doing is they're creating a software solution for courthouses all around the world. This becomes 10-year government contracts, very large contracts. They've built out a solution. They've brought in they've made some purchases to create the larger entity. And they're going through a lot of changes and to bring this up to speed. So they have one main competitor, Tyler Technologies, and Daily Journal is basically the other player in this oligopoly. And courthouses are notoriously behind in terms of their uses of technology. So the solution is very much in demand, and it actually saves the courthouses and counties money, which is really attractive. So they come in and actually the IRR is very positive for using a Daily Journal. One piece of the question was about this jump in revenues, which I've sort of been talking about a little bit over the last couple of years. It's fascinating to me to see. It's difficult for, I think, a lot of people to pay this much attention, but Daily Journal originally had two software solutions. They had Justware and they had eSuites. And Justware was something that they acquired because eSuites in the 90s was not catching on quite as well as they had liked. eSuites was their premier service, browser-based, cloud-based solution. What they needed was a Justware solution that already had hundreds of customers. And over the course of about a decade, they really merged these two businesses. So they had Justware as sort of the premier entry-level solution, and then they had eSuites. I'm sorry, Justware as the entry-level solution, and then they had their premier eSuites. And during the pandemic, it was a little shocking. We actually were pleased. I don't know if it was handled perfectly, but there was a memo that went out to all clients of Daily Journal that said we are no longer going to be supporting the Justware solution. We are going to move exclusively to eSuites, and we look forward to integrating this new software. So what that meant was that out of a really low revenue base, and out of the low revenue base of, let's call it at the time, 30 million, they were eliminating 8 million from the balance sheet. And they did it across fiscal years. So when that occurred, it removed about 2 million from the financial statements in 2021. Then it removed 8 million in 2022. And then that 8 million continues. But what happened was it stayed flat. What most of the world missed is, why did it stay flat? It stayed flat because eSuites is growing so rapidly. So as eSuites is rapidly growing, it looked like it stayed flat for a couple of years. And I mentioned 3 years ago, people are going to miss this. They're going to think revenue's not growing. But now we see revenue from eSuites exploding upward. We have, I believe, 45 million in annual revenue coming now into Daily Journal. About 4 years ago, from a very small start, we were modeling out 100 million in revenues by 2030. And to put that in perspective, it is remarkable that this company run by the management team is so talented. The capital allocation skills are so profound. And this is a company that has a 400 million market cap. They have 315 or so in equity. They have some deferred capital gains, a small liabilities, some margin loans, et cetera. And when we remove all liabilities from the company against the equity portfolio, we still have a net assets of 200 million within the 400 million market cap, leaving just 200 million as the total cost for the newspaper business, which we often put at zero, and the software business, which is growing and has 45 million revenue. So we do anticipate they will reach this number, and it will grow far beyond this number. So 100 million in 2030 is our previous projection. That is just a line in the sand. They could exceed that number. That should put this Daily Journal business at a valuation of $1 billion or so. Tyler Technologies, their main competitor, is selling for like 15 times revenue. So Daily Journal is earning 45 billion. Without their equity portfolio, it just costs, or 45 million. Without their equity portfolio, it costs just $200 million to have a firm that has been built by Charlie Munger over 40 years. They have a Charlie Munger run equity portfolio. They have all the moats in place for an outstanding business. They are doing things in a very unique way. And I will add one isolated comment, which is that being a Daily Journal owner makes us better investors, because I am watching very carefully what Charlie is doing, what Howard Marks Partners doing, what all of these exceptional individuals on the board are doing, and we're implementing those strategies into our own business. Sometimes it takes us a while to even understand what they're doing. Charlie Munger has commented on this. We can't teach the new dogs the old tricks. So we're constantly evaluating Daily Journal, trying to figure out what are the old tricks. And when we discover them, they're like gems, and then we incorporate them into our own processes.
Awesome.